any amount received by the trust or society. So that is also called as income for trust. James is a person who introduced the tax concept in India in 1860, where the government was sustaining losses. Types of income means we have only two income here. One is Indian income and the second one is foreign income. Warm welcome to 5th Sem BBA students. The subject Income Tax 1, the Session 2 of Unit 1, Basic Concepts of Income Tax. In our previous session, we have discussed about the Income Tax Act, Income Tax Rules, and Financial Act, as well as the judicial decisions and the types of taxes. In today's session, we are going to discuss about the meaning of income as per Income Tax Act 1961, types of income, heads of income. This is a concept what we are going to discuss with brief history of Income Tax Act of India. I am Professor Rajesh L.R. from Department of Commerce and Management, Vidhyaashram First Grade College, Temple of Excellence, MYSURU. The types of income, this is the first topic of the session, is clearly understand, my dear students. Here, topic what we have here, types of income. Plenty of students will get confused with types of income as well as heads of income. Types of income means we have only two income here. One is Indian income and the second one is foreign income. If they ask for 2 marks question, types of income, then I have to write Indian income and foreign income, not the heads of the income. Heads of income is totally different from types of income. What is that income? What do you mean by income here? The Indian income or foreign income, whatever they're saying, as per the Income Tax Act of 1961, under Section 2, Subclause 24, it is defined as, say, the definition of income given under Section 2 subclause is inclusive and not exhaustive, and therefore it may be possible to that certain items may be considered as income under this act. They're saying that when it is totally whatever that define the concept as per the requirement, and which one be called as income, those things are called as income, and it is considered as income for the person during the financial year. Either it is received or to be received, either directly or indirectly. All the things are called income in case of a person or an assessee. So the term income includes the following. Say, which are the income is considered as per Income Tax Act 1961. If I'm doing any business here, if I earn profits, is income. If I'm doing any professional activities, if I receive the gain, what you have received from the business or other thing. And if I receive dividend, dividend is nothing but I have invested some amount in the securities and received some benefit on the securities. The amount whatever I received on securities is dividend, and it is called as income. Say, dividend of domestic companies are exempted from income tax. Dividend of foreign companies are taxable in the hands of the assessee. And the next one, voluntary contribution received by trust, which is created wholly or partially for charitable or religious purpose, or for the educational institution, hospitals, electoral trust. They're saying that when any amount received by the trust or society, so that is also called as income for trust. And next, the value of any perquisite. Perquisite is nothing but the benefit received by the employee from his employer. Say, perquisites are the benefits received by the employee from his employer, or profit in lieu of salary under Section 17, taxable under Section 17. They're saying that when any benefits are received by the employee from his employer, or if any profit is shared with the employee other than salary, that is income. That is also treated as income. Any special allowance granted to the assessee to meet expenses either fully or necessarily and exclusively performance of the office or employment duties. Like for example, if any benefit are given by the employer to his employee for the purpose of official work, like for example, if I have received the amount from my employer for traveling expenses or conveyance expenses for the official purposes, then it is taxable in my hands. Next, the value of benefit or perquisite, whether converted into money or not, obtained from a company. They're saying that when if any benefit received from the employer by employee, even though it is not converted in terms of money, that will be treated as income in the hands of the assessee. The value of benefit or perquisite to a representative assessee like a trustee appointed under trust. Say any benefit received by the trustee who has been appointed by the trust to take care of the trust here, for that person it is the representative assessee. He will be called as a representative assessee and that will be called as income. Any sum chargeable to income tax under clauses 2 and 3 of section 28 and section 41 and section 59. Section 28, 41 and 59. Any sum which is chargeable under the act is called as income here. Any sum chargeable to income tax under clauses 3A, 3B, 3C, 4, 5, 5A and 6A of section 28 is called as income, which we are going to discuss in the upcoming chapters. Any capital gains chargeable under section 45. Whenever a property has been sold or any personal asset of assessee is sold above its book value or whatever it is, that one, that is treated as income in the hands of the assessee under section 45. The profits and gains of any insurance business carried on by mutual insurance company or by a cooperative society. They are saying that when if any amount is earned by the company for running the business activity of insurance, mutual funds, and if it receives any amount of benefits, it is treated as income in the hands of the company. Under section 44. The profits and gains of any banking business, including providing credit facilities carried on by a cooperative society with its members. If any cooperative societies are providing financial support for the public and if they receive any amount for the such facilities provided, that will be treated as income for the banking business activity of the cooperative societies, and they have to pay tax on the benefits whatever they received from the public. Winning from lotteries. If I win any lottery, that is lottery ticket amount has been received, and for that one, that is the income for me and I have to pay tax to the government. Any crossword puzzles, if I play any crossword puzzles and if I get some amount of benefit from the crossword puzzle game, if I receive that one, that is treated as income. Any races, it may be horse race or motorcycle races. In that one, if I earn money and if I receive that money, is called as income under Income Tax Act 1961. Any card games or other games or any sort of form of gambling or betting, if I receive any amount of benefit through gambling activities, that is treated as income and it is taxable in the hands of the assessee. Any sum received by assessee from his employees as contribution to any provident fund. Say provident fund is a retirement benefit of the assessee supported by the employer to their employees. If any sum are received, any sum means any amount is received from my employer towards the contribution of provident fund, then it is treated as income in my hands and it is taxable as per the provisions of the act. As per the provisions of this act. And any amount received under the key man insurance policy, including sum allocated by way of bonus, is taxable under the hands of the assessee. Keyman insurance is nothing but a group insurance taken by the employer on all the life of the employees. And if I receive any bonus from the Keyman insurance policy, that bonus is treated as income in the hands of the assessee and it is taxable in the hands of the assessee. Income under section 24, even that next concept, what it includes, any sum chargeable to income tax under section 56 subclause 2, subclause 5 and 6 is taxable in the hands of the assessee. Any sum of money specified movable or immovable property, that is, they're saying that when if I receive any amount of benefit from the movable property, means the assets which can be moved from one place to other place. Immovable means land. I cannot move the property from one place to other place. If I sell that one and if I get some benefit from that one, under section 52 subclause 2, 7 and 6a, it is treated as income and it is taxable in the hands of the assessee. Any consideration is nothing but amount of benefit received for issue of shares as exceeds fair market value of shares referred to in section 56 subclause 2. They're saying that when the market value of the shares exceeds the amount of information furnished as the share value, if it exceeds the fair market value, then the amount of consideration, that is nothing but amount of benefit which I have received, is treated as income and it is taxable under the Income Tax Act 1961. The next part here, any sum of money received as advance, means the amount of benefit what I have received in earlier itself I received as advance for the future purposes in the course of negotiation for transfer of capital asset. If such sum is forfeited as the negotiation do not result in transfer of asset, they're saying that I have received the amount as advance amount for the sale of the asset, but the negotiation has been failed and the amount has been not paid back, or the amount whenever I received in that financial year, that is treated as income and it is taxable in the hands of the assessee. The taxpayer should pay the tax on the income for the amount received as advance for the transferring his personal property to the other person. Any sum chargeable to income tax under section 56 subclause 2, any compensation or other payment referred to section 56 subclause 2, all these are taxable in the hands of the assessee, treating that one the amount of benefit received by him and it is treated as income and it is taxable. So these were the income under section 2 subclause 24 as per Income Tax Act 1961. Go and get all the concepts of income under section 2 subclause 24, which will be 2 marks question. Define income and which are the source from where I have received, how I have received, and which one is called income and why it is called income. Every concepts have been discussed here. So go through that one clearly and write your examination without any hurdles. And next heading what we have here, heads of income. As per Income Tax Act 1961, the heads of income is nothing but they are divided into 5 heads of income. The income is divided into 5 heads. The first head is salaries, income from salary, which are discussed under section 15 to 17. Second head they have divided here, income from house property from section 22 to 27. Third head, they differentiated here, profits and gains of business or profession, section 28 to 44 dB. And next head, they have made here, capital gains, income from capital gain under section 45 to 55A. And now, excluding these 4 heads, whatever the income is there, they call that one as income from other sources, excluding salary, house rent, and profit from business and benefit of income earned from the property transferred. Excluding these 4 part here, remaining all will come under the head of income from other sources. If they ask question for you people, mention the heads of income, then I have to write all the 5 heads of income. Right? Don't write Indian income and foreign income. If they ask types of income, Indian income and foreign income. If they ask heads of income, I have to write all the 5 heads of income. Brief history of income tax in India. So we are going to know about how the tax concept came in India and what basis. In India, tax was introduced for the first time in 1860 by Sir James Wilson in order to make the losses sustained by the government. They're saying that when Sir James is a person who introduced the tax concept in India in 1860, where the government was sustaining losses. To cover up those losses, they started the concept called tax. And on account of military of 1857, what we had here, the Industrial Revolution took place in 1857. After that, in India, there was the huge losses. To cover up those losses, Sir James introduced the tax concept here. Thereafter, several amendments were made in it from time to time. Every time they started to think that when how the tax has to be collected, how to make this tax structure, and what the taxpayer has to pay tax to the government, and how the tax collector has to collect the tax from the taxpayer. Like this, every concept from time to time, they made some updates. In 1886, a separate income tax act was passed. In 1860, they started to collect the taxes, and in 1886, a separate law they framed for income tax, and it was passed. This act remained in force up to with various amendments from time to time. They're saying that when this act was existed till the new amendments were made to the Income Tax Act. In 1918, a new income tax was passed, and again it was replaced by another new act which was passed in 1922. 1886 was the act, income tax was started, and again they changed it in 1918, and again they changed it in 1922 with certain new amendments for the act here. This act remained in force up to assessment year 1961-62. The 1922 act, whatever they had here, it was there in India up to 1961-62, after with n number of changes for the amendment, that addition and deletion for the tax structure, to frame the tax and tax policies, and to make some framing certain tax rules here. They thought that when we have to have a proper tax rules as to be framed while collecting the tax with the principles whatever we have here. So the Income Tax Act 1961 has been brought into force with 1st April 1962. The act, it is 1961, but it was started from 1st April 1962. It applies to the whole of India, including Sikkim and Jammu and Kashmir. The entire country is for the source of income, whatever the assessee they are receiving, that is controlled under this act, and they have to pay tax according to the place or their income or the source what they have received here. Since 1962, several amendments of so far-reaching nature have been made in the Income Tax Act by the Union Budget every year. Every year in the finance budgets will make certain changes for the tax policies or tax rules or tax amendments, that is called as addition or deletion for the sections, whatever we have here, 298 sections. In that one, adding a subsection for the present one or modifying some sections. Like this, they have done from 1962 till today, every year in the month of February, presenting this information in the budget in the financial year. This was the concept what we have discussed, the brief history of income tax in India, and we have learned types of income, heads of income, types of income, Indian income and foreign income. Heads of income, income from salary, income from house property, profits or gains from business or profession, income from capital gain, income from capital gain, income from other sources. These are called 5 heads of income. And next, we have discussed about brief history, how it came, who was the first person who introduced the tax in India. It was Sir James who introduced tax concept in 1860 due to losses suffered or sustained at that time. In the upcoming session, we are going to discuss about the different definitions of the words, what we have in the Income Tax Act 1961, which is compulsory question for 2 marks. And if you go through the next session, you can get the allotted marks easily. And we have only less number of definitions, what we're going to discuss, not the entire definitions, whatever we have here. We are going to take certain definition, which is important for the income tax subject. Those definitions will be discussed, and based on the discussion what we are going to make in the next session, that is very much important for 2 marks and even for 10 marks. Thank you to all BBA students. This was the information what we are given in the present session regarding about types of income and heads of income, brief history of income tax in India.